It showed how you could turn one contract into like $1 million in a year. Kind of figured it was fake or, wasn't realistic, but I still got hooked.
Hello and welcome back to another episode of Two Blokes Trading. I'm delighted to welcome Kevin Davey, a World Cup trading champion. Kevin is a systematic trader with over 30 years of experience and the author of multiple best-selling books. Kevin has built, tested, and traded hundreds of algos long before AI hit the scene. In today's episode, we'll dive into how he spots strategies that actually work, why diversification might be the holy grail, and how AI is changing the future of trading.
All those years I had over 100% return, and that was real money. I was able to do it 3 years in a row. I always thought it would get easier. The reality is it doesn't, and a lot of that's because
with your mechanical outlook plugged into this kind of a sentiment tool, do you think that would even give you another step up again and more of an edge in the markets?
My first prompt said, give me 5 unique exits. Past performance is not indicative of future results. It's almost like for people out there who played blackjack at a casino. If you play blackjack normally, you're going to lose. There's people who say, oh, hey, you should algo trade, and you eliminate emotions. As soon as you bring money into it, emotion come into it.
If you've ever wondered what separates systems that win from the ones that actually fail, this is the episode you do not want to miss. Kevin, welcome to Two Blokes Trading. We're delighted to have you here today with us to tell us about your background and your experience and learn a bit more about some of your books as well.
Well, great. It's been great that you invited me, and thanks for having me on, Jonathan. I really appreciate it.
No, it's a pleasure. The pleasure is mine. So tell me, it all started back quite some time ago now. You've been in the markets a long time, but it did start back when you're in aerospace. Is that right? You kind of aerospace engineering. Is that correct?
Yes.
And
so I was, that was my major in college. It was aerospace engineering. And so I had a job working for a defense firm in California. And shortly after starting, I realized I wanted to start doing investing and that kind of thing. And I got something in the mail. Back then there was no email, so it was all, paper mail. And it was about commodity trading. And, it showed how you could turn one contract into like $1 million in a year, that kind of thing. And needless to say, I kind of figured it was fake or, it wasn't realistic, but I still got hooked. So, I bought into it and then I started researching it and I'm like, hey, this is pretty interesting. And then it's been a over 30-year journey since that point.
And it's funny because a lot of engineers actually find their way into trading. I'm not sure why that is. I'm not sure if there must be something there because it's uncanny how many engineers I know that have gone into trading. What do you think that is? Is there something in that?
I'd probably say it's the technical aspect, the numbers, engineers and all kinds of technical people, science people. I noticed doctors, dentists, those kind of people who are more like data driven, numbers driven. They just kind of gravitate towards this because to them, it's sort of, I think at first they think, hey, it's just another problem to solve, how to take money out of the markets. That's a problem. And that kind of sucks a lot of people in. I know that's kind of the way it was for me. It was the lure of money, obviously, of making a good return, but it was also the challenge of trying to do things that a lot of people fail at. And, I think that's a big part of it too.
Sure. And in terms of obviously your background in engineering, did that shape your strategy building at all? Or did that have any
It did to an extent. As far as a lot of the engineering work I did, I had to be able to program in different languages. And, this was like Pascal, Fortran, Basic, these were old languages where nowadays, everybody's doing like Python. But learning different languages and learning how to program really became important for me when I started to do what is now called algo trading. Back then it was called systematic trading, but it was basically programming rules and putting them to a database of prices and seeing how they these strategies would do historically. So in that respect, yeah, a lot of the engineering stuff I did, definitely the
Fed
skills I
into it.
had carried over to trading.
Sure. And I believe you won the World Cup of Futures trading not once, but 3 times in a row. I mean, how do you get to that level of consistency? That's impressive.
Well, just to be clear, I finished in first place one year, and then the other 2 years on either side, I finished in second place. But all those
Okay.
years, I had over 100% return, and that was real money. And it was really just building a strategy. And I think the third year, I actually did a different strategy, but just going about testing a strategy. And my whole goal going into that contest was, if I can get 100% return, I probably will finish in the top three. You don't really know, because there could be somebody coming out of nowhere and get 500% return or something. So I said, well, I'm going to build some strategies that have a reasonable chance of getting over 100% in a year. And that was my goal, and that was kind of what I worked to. And I was able to do it 3 years in a row. And as it turned out, one year was first place, the other two were second place.
That's incredible. But I mean, like, how do you get to that level of consistency? I mean, like, and you said to me just now, right? You wanted to find a system that will give me 100%. Like, what's the framework around? Okay, I need to get at least 100%. Like, for you, is it like how you look at your risk reward, how you're looking at different markets, or how you're changing your portfolio? What was your plan around that?
Okay, it was kind of there's two parts to it. One is the strategy part, which can be back tested. So that's something you can test, and you can look back and say, okay, well, the last 10 years, every year, if I traded this strategy with so much money, I would have made 100%, or most years. So there was that kind of goal. And then the other part of it is the markets that you trade, and trying to be uncorrelated, trying to be diversified. So I was trading, I believe, up to like about 8 markets. Now, I wasn't in 8 different trades at the same time, but maybe 2 or 3 were firing at any one particular time. And so some of the consistency came about by trading those multiple markets, because when you trade a whole bunch of different markets, and with the same strategy or even different strategies, if they're uncorrelated, you'll get a nice smoother equity curve. And so that was kind of the part of just setting all this up. So it was setting up the strategy, and then setting up the portfolio, and then running a lot of they're called Monte Carlo simulations, essentially random number simulations, to see where I might fall. Hey, just because 8 of the last 10 years in back test, you got a certain profit, doesn't mean you're going to get it the next year.
Sure.
There's certain probabilities. And so that's kind of was the next phase, is figuring out, well, okay, I have a 60% chance or an 80% chance of hitting my target. Is that good enough? And at some point, obviously, I stopped and said, well, that's what I'm going to try, and we'll see. But I mean, it easily could have gone the other way, as far as under 100%, or maybe even a losing account. That there's probabilities of that happening too. It was just,
Sure.
it didn't on those years.
Good for you. We're going to touch upon more about algo trading a bit later in the episode. But you've been doing this for 30 years now. Like, what's changed the most, and what surprises you most between then and now?
That's a really good question. I always thought it would get easier. You think about any career, so I'm sure most of your listeners aren't trading as a career, but they have a career. And if they've been in it 10 years or 20 years, they've probably gotten a lot better at it. And now maybe they consider themselves the go-to expert, and maybe they don't have to work as hard as they used to get the same kind of output, the same kind of results. That is the way I always thought trading would be. I thought it would be, hey, you learn this, you master it, and then you just kind of sail and just keep investing and trading, and it just works out, and everything, it gets smoother. And, the reality is it doesn't. And a lot of that's because the competition is just so much more. I liken it a little bit to like professional sports where, maybe professional athletes 30 years ago, they didn't train year round. They didn't, do all the practicing that they do. A lot of them back before there was a lot of money in it, they would drive buses in the off season and do things like that. But now the competition keeps raising and they have to keep improving themselves to keep up with it. And it's the same way with trading, where you really have to keep up with the technology and just the state of the art. 20 years ago, there weren't many people who were programming rules and backtesting.
Sure.
There were some, and there was definitely a group that did it, but now it's really accessible to just about anybody. And in fact, lately I've noticed some of the AI engines, I will talk to it about trading and it'll say, "Hey, do you want me to backtest this for you?" It's just like, wow,
Yeah,
you
yeah,
know,
yeah.
and that's
It's
something
incredible.
brand new. So that's probably the biggest thing. It's just always been a challenge. I think it always will be.
For sure. And I think every day that you're in the markets, you're learning something, which is different to most other things. Doesn't matter how experienced, how long you're in the market, we all build biases and we all kind of have strategies, but I always feel like there's something to learn. I think there's always, every day, there's something to take out of it because the markets are changing so rapidly, whether it's geopolitical, whether it's whatever the case is, markets are always changing. So it's always about trying to stay ahead, stay ahead. There's no crystal ball, but it's just trying to keep ahead of the pace and what's going on in the sentiment and so on. So it's fun. I think that's why we love it so much. Yeah.
Yeah. That's, you said it a lot better than I could have. That's exactly right.
And you mentioned it earlier on about diversification. Obviously, one thing that you say it's one of the closest things to a holy grail.
Yes.
Tell me why you say that.
Well, it's kind of evolved over time, my thinking on it. So uh, I didn't realize it way back when. So let's just say 20 years ago, I would trade a handful of strategies in different markets and that kind of thing. And what I always noticed at the end of the year was there usually were a couple strategies that did really well, and they might have made most of the money that I made. There were a couple strategies that were probably break even, and there was another strategy that maybe was a loser on the year. Okay. And I noticed that year after year, but the problem was every year the strategies would change, which ones were the best, and you never knew.
Mm-hmm.
And it just slowly dawned on me over time that the real key was just trading them all because you didn't know what was going to happen. You didn't know, for example, if the grain markets would take off next year,
Yep.
or they might do nothing. It might be just a flat year.
Mm-hmm.
And so if you were only trading grain strategies, you'd have like maybe a break even year and you'd be like, well, this is no good. And that might be the year that gold takes off and
Sure.
your gold strategies would have done good. So what I noticed with the diversification was trading a bunch of different strategies. You're never going to have all of them make money. I mean, that would be nice, but realistically, it doesn't happen. But the upside is not all of them are losing money. So you have enough of them that have an edge, that are doing well, that you put them all together and they kind of balance each other out, smooth the equity curve, and overall you do pretty well. And that's the real key with diversification.
I think we all kind of sometimes tend to swing towards or push towards trading that one market that we know and trust and love, especially when things maybe uh, slightly harder. You're going through a bad trading period. You tend to go towards that one that you always go back to. But I definitely think diversification is absolutely key in anyone's portfolio. But you think when people are diversifying, they need to understand that market well enough. There's no point just diversifying into a market that they don't know a whole lot about. Would you agree? Or because you're more mechanical, is that different?
Yeah, I would say if you're more of a discretionary trader where you want to look at charts and draw, your support and resistance and look at price action and those kind of things, it probably is better for you to know the market more and know the behavior. Where if you're algo trading, mechanical trading, doing what I do, I don't think it's as important to know the nuances of the market because one, you're historically testing it, and two, you're going to go forward with these strategies, and hopefully that whatever that market does in the future is kind of not a mirror, but kind of like a close brother or sister of what it did previously.
Sure.
Obviously, though, you do run into things like the whole tariff situation in March and April of this year, where I had a great, actually, it was April. So I had a great first quarter of the year. And then all those announcements came out on the tariffs. And that was something that I had never modeled because it had never happened before. And, I got slapped around a bit. So that's where maybe knowing the market a little bit better and realizing that, hey, this tariff thing is going to cause lots of movement in lots of different markets. Maybe it's better to just stay on the sidelines.
Sure.
That's where that might have helped. But in general, if I don't know the nuances of the market I'm trading, it doesn't really bother me. So, for example, I'm in feeder cattle right now, which is a fairly thin market, and
Yeah.
it's been doing great. I've been long, but I couldn't tell you what's really driving the feeder
Yeah.
cattle market. And
Yeah. Sure.
I just hope my strategies get out before it all collapses.
Yeah. But let me so put it this way, right? So because it's mechanical, did you ever think about kind of plugging in the AI to help with this side of that side of it? So that their kind of sentiment approach, like we're building a lot of AI sentiment at the moment. And do you think like with your mechanical outlook plugged into this kind of a sentiment tool to allow you to be able to kind of see this before it happens, or at least give you warning signs or give you that information quicker and faster? Do you think that would even like give you another step up again and more of an edge in the markets, or what do you think?
I think it could. The issue that I personally have is being able to historically test it. So it's one thing, let's just say you build some kind of AI model that goes out to social media and grabs a whole bunch of opinions and then tells you, hey, most people are really chatting gold up. And so this would be a good time for a long signal in gold. Or maybe if you get a short signal, hey, maybe it's time to ignore it. That might work out really well. The problem is, though, for me at least, is I'd want to test it first before I believed it. It's one thing to say, hey, the sentiment is gold's going up, but it's another for the market to actually follow through. So I
Sure.
think that thing eventually you could do it. I don't know how you'd go back in time and do some of it, but there's probably ways that people are doing it. Some of that might just be real time
It,
testing. So you have your strategies, you have your sentiment that maybe is AI generated, and maybe you watch it for a year of how well does that do real time. And then at the end of that year, you say, okay, yeah, it's done really well. It did really well. It improved my performance. So therefore, I should use it.
that,
I mean, at least that you have a year of hard
yeah.
data. But
That's exactly what we're doing at the moment. I think it's really important. So like what it will, it's not just sentiment. So it'll obviously go through certain socials. It'll look at some of the top news headlines. It will also then go to the charts as well and kind of collate all that information and come back with some kind of a forecasting. But it's interesting because for me it's like I wouldn't be as big in terms of the automated side of things, but like having been able to mesh them together with a really good kind of mechanical trading system. I just think that's the next step for us, and I think that's really cool that to pick your brains. It gives us the opportunity to learn more about the mechanical side as well. So yeah, it's such an interesting space.
yeah, and it's definitely a step beyond what I primarily do, because now you're trying to incorporate that real time. But yeah, it's an interesting path. Be
For
neat to see
sure.
where it goes.
We'll certainly try and talk about that in the future. But
Yeah.
so moving on to your new book, congratulations. I believe it's called 11 AI inspired algo trading strategies, which
Yes.
will be released soon. Am I correct?
Yeah, it's probably a couple weeks out, but what I did with this book was I used primarily Chat GPT and said, "Hey, develop some strategies for me." And of course, AI is a lot better than it was a couple of years ago. So 2 years ago, you asked it this question and it would just give you a bunch of garbage.
Yeah.
Now it's giving you pretty good ideas first, and it actually codes them for you. And, there's always issues with the coding pretty much in any programming language, whether you're using, I use TradeStation, so that's easy language. If you're using NinjaTrader or TradingView or Python, it'll give you code, but a lot of times you got to go and fix it. But I used it to give me some ideas, and then I went off and modified them and then tested them and came up with 11 strategies that different markets, different bar sizes that have worked pretty good, both historically and I also had a big like live trading type piece, and the strategies seem to hold up. So that's what I share in the book, along with kind of how I did it, at least, a sort of high level, not into the real details, but it'll
That's
give
awesome.
people things to think about and how to start using AI to at least come up with new ideas, because that's a great place to get ideas. You can have AI go and research university papers and extract things. And sometimes the things it extracts are really bizarre. You can tell they're created by people who don't trade. The tip out for me is always there's this big research paper and they say, well, we didn't include slippage and commission. So
Yeah,
right
yeah,
then
yeah,
I
yeah,
know, well,
yeah.
right then,
Bunch of
of
people
course
putting a
they're
demo
not
to the
going
wall.
to. Yeah,
Yeah, yeah,
it's going to show optimistic results, but
yeah.
maybe there's
I think
something to the idea, and so that's
for sure.
kind of how that book came about.
For sure. And I think the key though with using AI is to stop it from hallucinating, trying and making sure that you're feeding it the right information to get the right result, if you like. And you say in the book that AI didn't replace you; it inspired you. Can you
Yes.
maybe share a trade idea that AI gave you that maybe you wouldn't have thought to do yourself?
Yeah, well, I'm not sure if one of these strategies made into the book, but one of the things I asked it at some point is give me some exits that aren't stop loss, profit target, trailing stop type exits. That's what most people use. Okay.
Mm.
So I said, give me something completely different. It's based on maybe a normal distribution of prices, and when it falls out, then you exit, something like that, something just very unique. And what I did, this isn't in the book, but this was another thing I did with AI. I did 5 AI exits that were your traditional, like stop loss or maybe a moving average crossover to exit. Tested those 5. I also tested 5 of these quote unquote unique ones. And they were so unique that I like tried reading the code and I was like, I'm not even sure what this is doing, but it does give a sell signal, So I said, well, so I'm going to go with it. So I tested these on a whole bunch of different markets and with a whole bunch of different entries like counter trend, trend following, and tallied up all the results. And the crazy thing are 4 of the best 5 exits were all those quote unquote really unique exits. So the top performers were the ones that I had never tested before, where the bottom of the list was usually the moving average crossover, those kind of
That's
ones.
really
So
interesting.
yeah, that was a really a good eye opener for me, because I hadn't really thought of it and of doing that before. The interesting thing was it was really a prompting thing with AI. People talk about AI, you've got to prompt the engine correctly. Well, my first prompt said, give me 5 unique exits. And it gave me what it thought were unique, but it was like the moving average crossover and those kind of things. I'm like, that's not unique. I said, I want something really unique. I said, go to university papers, research papers. And then it came up with those other 5. So I had to push the Chat GPT in this case. I had to push it further than it originally went, but I ended up with something that gave me some really kind of neat exits, and these are ones I'm going to start using more and more going forward.
That's awesome. And I think that kind of feeds into how do retail traders compete with institutions and find their niche in the market, find their edge, and you said that wasn't by following the crowd almost. It was more from having a completely different strategy, finding its own niche and being able to profit from what it's identified within that market. So that's incredible.
Yeah, it was definitely an eye opener for me as far as um, just realizing this could be a good source of new ideas.
And did you say that's in the book as well, or is that not in the book?
That particular study is not in the book,
Okay, you can
but
send that to me afterwards. Yeah.
yeah, yeah, because it's probably you talk to me in 2 weeks, I'll be like, oh yeah, now I did this thing. So
Yeah.
it
Yeah.
seems like just AI as it becoming more capable. Uh, I know
I
for
think you can
me,
get a lot of messages.
I'm just thinking of more things to do with it. I'm like, oh, hey, I'll do this. So
Sure.
it's
And
neat.
like you shared 11 like full strategies, right, within that book. Tell
Yeah.
me, like, most traders don't want to give away their secrets. Tell me why that you're happy to do so.
Pretty much. Well, one, I don't think I've never been of the opinion that I have the quote unquote holy grail strategy that I've got to keep it locked up and have to have an armed guard at my house or at my office and can't have anybody steal it. I've never thought a strategy would be like that, because chances are any strategy you come up with, there's probably going to be other people who develop something similar.
Mhm.
So I've always been pretty open about sharing strategies, because I don't think that's necessarily where the real value is as far as being a good algo trader. Yeah, it's nice to see what other people are doing. You might even decide to trade them yourself, but trading someone else's strategy is tough because you
Yeah.
didn't develop it. And when it goes through drawdowns, you'd be trading one of my strategies and you'd be like, oh, well, this strategy is a piece of garbage. Kevin didn't know what he was doing. And look at this drawdown. Where if you develop the same strategy yourself with a process you trust and is repeatable, then you'd say, well, hey, I have other strategies that I've developed like this. They all have drawdowns. Therefore, I trust it more. So the point in sharing the strategies is, one, to give people some, I use the fish analogy. You teach a man to fish, you feed him or you give a man a fish, you feed him for a day, you teach him to fish, then he can eat for a
Lifetime.
lifetime. So
Yeah.
I'm giving some fish so people can eat, and that gets them started. But the real
I like that.
key is learning how to fish for yourself and,
Sure.
doing it yourself, because that's when trading can become sustainable. You're not relying on a guru or a book or something, you're
I
relying
agree.
on yourself. And
Absolutely.
that's for people in trading, most of them feel that it's them and they want that ownership. And that's kind of how I like to look at things.
I agree, but I think you can take good things and amalgamate that within your strategy, or take the best parts of what you feel other people are doing to just to build upon your own strategy. I think we all want to. There is no holy grail, like you say, but we all want to try and get better and better, better consistency, better better profits year on year, and so on. So I think having the opportunity to read your books and go through your studies and see how you actually trade and how your mind works can only help somebody, to improve their own systems.
Yeah.
Do you ever think like that AI eventually will completely run a full system, like optimizing, re-optimizing, systems in real time?
I'm sure there are some out there that some of the bigger hedge funds are running that do that. Uh,
Annoying.
I don't
Annoying.
know I don't know how popular it'll be on a retail level. Maybe it'll all be machines eventually just trading against each other. But I kind of like to think that there'll still be room for individuals to put their own spin on things and not just turn it over to AI to do everything. Certainly, there's AI is going to influence a lot of just how people develop strategies. And like I said, it now is offering to back test for me, but I don't know if it's any good or not. And
Sure.
I'd be really scared of it because here I've been back testing all these years. I'm pretty confident how I back test. I'm not about to turn it over to AI. And I suspect it'll make a lot of mistakes at
Yeah,
first, but eventually it'll probably get pretty smart.
for sure. And look, I think there always needs to be somewhat of human intervention within that, especially at the moment. Anyway, there's no doubt about that. But you just spoke again about back testing, and like that's that's great. But in terms of how do you get your metrics to hold up live? So when you're looking at all this past data, and it's like, okay, so how do you know that's going to hold up in a live market?
So originally what I did was it was kind of trial and error and came up with, okay, well, if I have this particular performance metric at this value, these strategies tend to work going forward. Um, and I kind of enhanced that over the years. That was what I used to win the contest. Now with you know just the computing power that's available, what I've done is a couple of years ago I went back and I ran hundreds of strategies and millions and millions of back tests. It was probably by the time I was done, it was a couple 100 million back tests. But what I did as part of that was I said, okay, well, if I build a strategy, I want it to work for, say, 3 years. I picked 3 years because I thought, all strategies eventually degrade. So I thought, well, hey, if I can build a strategy today that makes decent money for the next 3 years, I'm happy. So that was my criteria. And so I kept a 3-year period where I did not test it. I just recorded what it would have done live and then compared that to the back test that was before those 3 years and basically did a pretty heavy analysis of what in the back test could help predict that 3-year future performance. And as you can guess, there's a lot of noise and a lot of things that don't matter that people think matter. Like, for example, winning percentage. A lot of people like that, but as far as it being predictive of future performance, no, it's not really. And so what it came out to be is I found some parameters and some measurements where roughly about 2 out of 3 of the strategies that met all that criteria would make money those next 3 years. So far from perfect. A third of the strategies, even though they had great looking back tests and met all these performance metrics, still lost money in what I call real time in that 3-year period. But the 2/3 that made money in real time, they overcame the ones that lost. So what I tell people, what it really comes down to with back testing is, they always say back testing, past performance is not indicative of future results. Okay. Absolutely true. But I'm of the opinion when you do back testing correctly, you kind of tilt the odds in your favor a little bit. So it's almost like for people out there who played blackjack at a casino. If you play blackjack normally, you're going to lose. Doesn't matter what money management plan you have or anything, that the odds are against you. And, it's definitely true because if it wasn't, the casinos wouldn't offer it. They're not going to offer a game where they know they're going to lose money, right? They know they're going to win. So that's how most people trade. The odds are against them. The house wins. So my opinion is when you do back testing correctly and do everything correctly, it almost is like you become a card counter at blackjack, where that's been proven to put the odds in your favor. Realistically, if you try doing that at a casino, you're going to get kicked out because they don't like winners. Yeah. But in the markets, if you go in with that little edge, you can do pretty well. And that's kind of how I look at it because, a lot of people approach trading as, I'm going to start trading this method, whether it's an algo, discretionary trading, price action, whatever it is. And then the first week they do it, they lose money and they're like, well, this idea is terrible. I'm going to go try something else. Where, they didn't let the long-term probabilities play out.
Sure.
There's card counters in Vegas who in the short run lose money. You have to play for a long time. And I think that's a big key in trading is being able to let those long-term probabilities play out. So for me, building back tests. I was able to find some parameters that tended to predict future performance. And now that's my criteria. And so I get new strategies. And I know on average, roughly about 2 out of 3 of them. So it's close, probably closer to 70% of them will make money in real time. And
that's kind of technical based, right?
um, technical as far as the strategies or the performance.
Strategies.
Yeah, but it could be the strategies themselves could be based on anything. They could be based on candlesticks. They could be standard indicators. They could be price patterns that aren't candlesticks. They could be statistical things that you've noticed or you've analyzed. There could be a lot of different ways to do it. What ends
Interesting.
up being important is that the back test does work. So again, past performance is not indicative of future results, but all things being
Yeah,
equal, if I have a strategy that lost money the last 10 years every year versus a strategy that's made money, I'm going to trade the one that's made money.
for sure,
Um,
for sure. I'd say the hardest thing for someone who's kind of a mechanical trader in that way is that regime changes, right? In terms of, or geopolitics, or look, Trump, for instance. I mean, this, like, look, it's been a crazy time in terms of the markets. Even for any kind of a trader, it's been tough to understand. A lot of correlations have disappeared. Lots of things that were happening in the market that you could kind of gauge, that kind of, that's, it's got tougher and tougher. Now things have settled down a small bit now, but how do you change your systems when you come into high volatile environments like this?
Good question. There's a couple different ways you can do it. One is you can actually just build your strategy from the beginning without high volatility, meaning you can identify uh, areas of high volatility through some measurement. Maybe it's based on like average true range. And you say, hey, when the average true range gets above a certain point, I'm just going to turn off my strategies. And you test that historically. And you say, yeah, that looks good. Then you know you're sort of covered if that happens. You could also do it with low volatility. So there's a lot of different kind of switches you can design up front. The key is to do it up front, not to do it after the fact. Like, it would be easy now to go back to some strategies I had that struggled during the tariff volatility and say, oh, I'm going to add a rule in. And so now going forward, it'll work better. Well, that's just curve fitting. You can't do that after the fact and expect it to work. But if you did it up front and it worked over the past 10, 15 years, then you could say, well, I'm reasonably covered for the future. If there's high volatility, I'll just go to the sidelines. And, that psychologically, that might be a good thing to do too. But the real
How much?
key, I'm sorry.
So now I'm just wondering how hands on are you with your, like? So you have the system set up. You press play almost. How much oversight and how much hands on are you within changes within that, or do you just want to let it play out?
Usually I just let it play out because that's the better thing to do. And my philosophy is, hey, I spent all this time historically testing it. Why would I do something different in live trading than what I know worked historically? And a lot of people don't feel like that. They feel like they're better than their strategy. And
Does
I'm not going
bias
to say
take
they,
over?
pardon?
Does bias take over? Maybe, do you know?
Yeah.
Does that our own bias within understanding the sentiment of what's going on in the markets maybe make us kind of misjudge things, or maybe oh, okay, my algo is not going to pick up on this, and so you're kind of tinkering with it. But you think staying away from it is the best idea?
For me personally. But what I always tell people who want to tinker and, they have let's say a strategy running, but then they say, "Ooh, there's a Fed announcement in a couple days, so I'm going to turn my strategy off."
It
Track
defeats
it.
the purpose, right? Because
Track.
you're bringing emotion.
Yeah, but you can track that. You can track, okay, well, what would happen if I just followed the signals, and what would happen if I did what I think, and compare it after 3, 6 months. And you should be able to put side by side, well, here's if I did nothing, here's how good I did or how poorly I did. And here's with my discretion on top of it, here's how I did. And that should
Sure.
tell you. And so,
Yeah.
uh, for me personally, I know that I'm pretty bad at that discretionary part. I mean, I've seen signals from my strategies where I'd be like, why is it going long? Oh my goodness. And it turns out that was the right thing,
Yeah.
but I wasn't thinking that.
Yeah.
So, but you can definitely track all that, and maybe you can make yourself I guess, the overseer of your algos and make better decisions. But for most people, I would think it's probably going to make their performance worse because
Sure.
of emotions and those kind of things.
And that's kind of the reasons why you have an algo trade setup and system, is to remove that, right? That's the whole idea of it. I guess that's when we're talking about the start of the interview, is that kind of amalgamating sentiment into that algo, but it's just doing it in the right way, and not taking over all the good work and historical information that you have, that it's not going to mislead it. But like you say, yeah, run 2 or 3 and try them out and see what happens in 6 to 12 months.
Yeah,
That's key.
yeah, that's a good way to judge it. And because emotions, there's people who say, "Oh, hey, you should algo trade," and you eliminate emotions. Those are whenever people say that, I know they're not trading real money for one, and they're probably not even like sim trading, because as soon as you bring money into it, emotions
Changes
come
everything.
into it. So it might not be, oh, hey, should I take this signal, this buy signal, this sell signal? But your emotions will come up. Hey, this strategy has lost 5 trades in a row. Should I turn it off?
Mm-hmm.
And that's where your emotions start to get involved. So it's still there. It's just different. And, for people, though, who are always afraid to pull the trigger with a trade, that's where algo trading might actually help them.
Yeah.
But ultimately, if you're going to be really freaking out about winning and losing money,
Probably
um,
shouldn't be doing it in the first place, right?
yeah, it's going to be tough no matter which way you
Yeah.
trade. Exactly.
And in your strategy factory workshop that you do, you kind of, what separates the guys that kind of have long-term success from those who ultimately fail?
Um, It is probably their dedication to the process of building strategies and liking to build strategies. So, for example, I just got an email yesterday, the day before, from somebody who took my course 10 years ago and said now they're using these principles and they're trading a 7-figure stock account, just developing strategies all during that time.
Awesome.
And so there's dedication there, because it gets hard. Most of the stuff that I test fails. It's like, oh, this doesn't work, this doesn't work, this doesn't work, and then once in a while you find a gem. Well, this works, and that's what you end up trading. So there's that part of it. And then the flip side, I'll take a person who quit because they lost. This person was building strategies, and we have a club where you can submit strategies, and I evaluate them in real time. It's kind of a neat way to share strategies with people. And this person created some great strategies. I mean, they were doing really well in real time. And I thought everything was fine. And then one day he emails me and says, quit emailing me. I'm done. I was like, what? What? And so I was like, what happened? You're one of the better students. He goes, yeah, but this algo trading, I'll tell you, I've been doing good with it, but it's kind of boring. I don't have anything to do. So I started discretionary, chart trading. And long story short, I blew up my account. I have no more money to trade with, so that I'm just done. And so again, it's the people that succeed tend to stick with it and tend not to get frustrated. But people that fail, and there's probably people that fail just algo trading, because you're going to hit drawdowns, and drawdowns are painful. And
Mm-hmm.
that's part of the game, is being able to overcome those drawdowns.
For sure. And on that, I mean, like, do you have certain risk parameters around every single trade? Do you kind of widen risk and shorten risk depending on the market you're trading in? I assume that's all built into your system.
Yeah, so I do a whole bunch of different things. Some of them, I actually do have some strategies that don't have stop losses. And I've been bitten by those before, where, hey, historically, not having a stop loss leads to better performance over the long run, but you have to endure some pretty tremendous drawdowns along the way.
Yeah.
So everything's a trade-off. So I try to do with my own strategies a lot of different things. So some have profit targets, some have stop losses, some have both, some have neither.
Mhm.
And you try to get this wide array of different strategies, and that kind of helps with the diversification. So yeah, you might be killing it in crude oil, but all your cocoa and coffee strategies are suffering. Um, but they kind of balance each other out, and that's kind of what you aim for.
100%. But I suppose just for tips for our listeners, we've all got kind of different pain thresholds, I guess, and some people might hear, what, no stop loss? And I think the biggest mistake that new traders make is they do not use stop losses. I mean, like
Mm-hmm.
for me, it's there's nothing more important than using a stop loss as a new trader. But when you become more of a professional trader and you're in front of your screens, you can control what's going on in front of you. Most people will push towards not having stop losses, but again, that's purely based on experience levels that you have. But like new traders, anyone that wants to start trading new and doesn't use stop losses, it's a one way to just blowing your account up, unfortunately. And when you're in these kind of drawdowns and you have different markets, like what's your cutoff pain point for one particular trade?
For one particular trade, it varies from market to market. So I might be completely willing with like the mini S&P to have a 50 point stop, which would be
Yeah.
$2,500 per contract.
Yeah.
That's a pretty big one where a lot of people are like, well, I'm only going to have a 1 or 2 point stop. And they think that's protecting them. And the problem with that is,
Just like keep getting stopped out.
yeah, is one stop of 50 points better than 10 stops of 5 points each? It's the same thing. And um, so it really depends on the market, but what I've found is the larger stops are usually better, but psychologically, it's hard. It's harder to be in a trade for a long time where it's still down and you might be down to, let's say, a couple $1,000s per contract in crude oil. And, wow, I haven't gotten the exit signal yet, so I got to stay in it. And that's the hard part. It'd be nice if you could just walk away and then come back a week later and see, oh, yeah, well, eventually it turned around and made money. And so that was
Well,
great.
agreed. Yeah, exactly. And even for new traders, I mean, reduce your trade size and widen your stops, again, is another good way just to be able to stay in the market for longer, for sure. Look, I don't want to keep you for too much longer. Because I know you're a busy man. Tell me, lastly, you've written books, you've run workshops, and you still trade 30 years later. What's next for you now on the horizon? I know you have a book coming, and
Yep.
I'm excited for that because I'm going to be one of your first buyers. What else is on the horizon?
Probably just keep doing the same thing. It's funny. I was talking to a while back, about 6 months ago, John Ellers, who he's a pretty famous signal processing person who does trading. So he created the Mesa system. He does very numerically oriented technical trading. He was an electrical engineer and took on trading, but he's in his late 80s, and I think he finally just retired. But he's still writing articles for trading magazines. But because I was talking to him about just that what is the future, and so for me personally, I don't see myself necessarily like retiring. This is something
Anytime
I
soon.
love doing, and I love trading. I also love teaching. Uh, I get a big kick out of that, and that also improves my trading. So when you
So true.
have to put things down on paper or in a presentation, you really have to
It comes back
understand it.
onto your head, right? It's locked
Yeah,
in there somewhere, but you kind of forget about it until you say it, and all of a sudden, oh, of course,
yeah.
funny
So
how that works, huh?
I mean, and the neat thing about what I do, I can pretty much do it from anywhere. So I'm getting close to retirement age, getting close to like 60. I don't think I'll be retiring, but my wife, she works. She'll probably be retiring. We'll probably be traveling. We might be knocking on your door in Ireland one
Yeah,
day and say, "Hey, uh,
you're always
can
welcome.
you host us for a little bit?" But that's one of the things we've actually talked about is me teaching, I've been able to teach people all around the world. And I said, we literally could go on a world tour
For
and
sure.
I could visit students in pretty much every country, which
Yeah.
would really be kind of neat. And so we're kicking that around, especially once the kids are all off to university, then maybe we'll do that. But yeah, I don't, the challenge of trading is just too alluring for me just to like walk away from it.
Yeah.
I really love doing it.
For sure. Well, look, I wish you all the best with your trading in the future. And it's been an absolute pleasure and a joy to have you on our podcast today. Thank you so much, Kevin,
All
for
right.
coming
Well,
on
hey,
today.
thanks for having me on and great questions. I enjoyed it.
Thank you very much. I appreciate it. We'll get you back soon after the book, potentially. Yeah.
All right. Great.
Awesome. Thank you so much, Kevin.
All
Take
right.
care.
Thanks.
Bye now.